Welcome, tech aficionados, to the Tuesday edition of Tech Stocks Daily. Get ready for a thrilling ride through today's biggest headlines. We'll dive into Apple's latest tango with trade tariffs and its AI conundrums, finding out whether market volatility spells a buy, sell, or hold for investors. Plus, Microsoft takes center stage with a monumental $800 million carbon capture initiative, showing they're not just innovating in tech, but also taking bold strides for the planet. Whether you're here for insights on the stock market, eco-technological innovations, or just some juicy tidbits, we've got you covered. Tune in and get the scoop on all things tech. All right, tech fans. Apple is once again stealing the spotlight, making waves in the news for various reasons today. Let's dive into the juicy details behind Apple's recent headlines and explore the implications for investors and tech enthusiasts alike. First up, Apple dodged a potential economic pitfall thanks to a significant move by the Trump administration, which over the weekend exempted smartphones, computers, and other tech gadgets from those dreaded tariffs on Chinese imports. Given that Apple leans heavily on its Chinese manufacturing partners, this was a big sigh of relief. Tariffs would likely have spiked iPhone prices across the US, making your next Apple gadget purchase even pricier. However, don't pop the champagne just yet. Tariffs are known for their unpredictability, much like a line of code that's always crashing. While the initial tariff relief may keep Apple's pricing steady for now, the landscape remains uncertain. An economic slowdown seems to be looming like a bad software update, further complicating Apple's strategic plays. Consumer confidence took a nosedive, registering its worst in 12 years. With people tightening their wallets, smartphone upgrade cycles, already stretching thin, may elongate further. A less than ideal scenario for a company relying heavily on new sales. Amidst these trade war jitters, Apple's seeming stumble in AI features, specifically Siri and Apple Intelligence, adds to its woes. Despite a recent management overhaul, Apple's AI prowess is reportedly lagging. This shortcoming raises questions about its ability to compete in an AI-animated world and attract more users into its ecosystem. Adding another layer to Apple's AI ambitions, the company announced plans to revamp how it processes data by going on-device. The goal? Intensify user privacy and fine-tune Apple Intelligence without risking data leaks. Gotta love a company that respects a user's privacy as fiercely as you protect the last slice of pizza. Yet while this move bolsters Apple's image as a privacy fortress, it doesn't address the slow rollout of its much-awaited AI features, pushing significant updates to Siri as far out as 2026. Lastly, what's been happening with the Apple stock roller coaster? In recent months, Apple stock took a dizzying 30% plunge from its peak, landing at $172 per share. History suggests that Apple stock typically bounces back like an indestructible rubber ball after such dips, with an 80% climb in the following year plausible. But as always, past performance doesn't guarantee future results, especially amid high tariff unknowns. Also casting shadows over the horizon are potential tariffs ranging between 24% and 46% on goods from other key manufacturing hubs like Vietnam, South Korea, and India. All this trade tentativeness lends Apple's stock the same level of unpredictability as a cat trapped inside a Roomba. It's no wonder that investors remain cautious regarding Apple's valuation, currently viewed by some as pricey, given the plight of escalating tariffs and economic uncertainty. So there you have it, the dizzying roller coaster that's currently Apple's market and tech landscape. Stay tuned as we monitor how this tech titan navigates the stormy seas of trade policies, AI updates, and economic pressures. All right, folks, let's take a deep dive into why Microsoft was making waves in the tech news today. First up, Microsoft announced it's backing the world's largest CO2 removal project with an investment plan worth a jaw-dropping $800 million. It's not every day you see a tech company venturing into eco-warrior territory like this. Microsoft has committed to purchasing 6.75 million metric tons of engineered carbon removals over the next 15 years. In collaboration with Atmosclear BR LLC, a portfolio company of Fidelis, they're planning to implement bioenergy with carbon capture and storage technology in a project centered in Louisiana. That's bioenergy, carbon capturing, and a sustainable future, all rolled into one initiative. The expected outcome is a whopping sequestration of 680,000 metric tons of CO2 annually, contributing a massive boost to Microsoft's goal of becoming carbon negative by 2030. Now that's a statement. A tech giant putting its money where its mouth is when it comes to tackling climate change. With construction starting in 2026 and commercial operations by 2029, this project doesn't only pioneer environmental responsibility, but also promises economic revival with the potential to create 600 construction roles and 75 permanent jobs. Not to mention, it could revive local industries like forest management, which have seen downturns due to recent mill shutdowns. So, kudos to Microsoft for not just computing in the cloud, but getting their heads out of it to think about planet Earth. Next, let's break down Microsoft's competitive standing. We've got some juicy insight from an industry performance comparison piece. As one of the top contenders in the software market, Microsoft holds its ground, and then some. Despite some slower than industry average revenue growth, they're showing strong profitability with remarkable stats like a higher than average return on equity, EBITDA, and gross profit. Plus, their lower debt to equity ratio suggests they're handling finances like pros. In a nutshell, Microsoft's state is looking as healthy as ever. From paving the way in the carbon capture industry to outperforming peers financially, they are dominating headlines and maybe even hearts. But hey, enough from me. I'm itching to hear your take on Microsoft's environmental gambit and how they're stacking up in the software industry. Have they proven themselves to be the ultimate tech and eco-hero? Or do you think they've got miles to go? Did any of these updates surprise you, or were they par for the Microsoft course? Jump into the conversation and share your thoughts with us in the comments. Your perspective ticks at the heart of this tech buzz. I can't wait to dive into what you're thinking. Let's talk about Apple and whether I'd consider buying, selling, or holding their stock given today's news. With Apple's mix of good, bad, and downright unpredictable news, it's like trying to play chess on a roller coaster. Here's the scoop on why I'd go with a hold strategy right now. First, the good news: the Trump administration's decision to exempt Apple products from tariffs on Chinese imports is a major relief. Kind of like finding out your new gadget arrived with all its parts intact. This avoids even higher iPhone prices, which is vital given current economic uncertainty. No one wants to break the bank buying gadgets when consumer confidence is at its lowest in 12 years. Then there's the AI factor. Apple's lagging behind in that department, akin to playing catch-up in a three-legged race. While they have privacy perks and a strategy for on-device data processing, this doesn't roll out any significant AI advancements anytime soon. Apple has said some updates might not debut until 2026. Not exactly warp speed for the tech world. Stock-wise, it's currently bouncing like a cheetah on a trampoline, down 30% from its peak, with a historical tendency to spring back. But with tariff uncertainties on products from other countries like Vietnam and India, the waters are still murky. Livelihood disruptions in Apple's global supply chain could spell hiccups that even Siri can't predict. Combining these ups and downs with economic clouds on the horizon, Apple's scene feels too uncertain for a full-blown stock purchase or sale right now. It might be wiser to sit tight, further evaluate the landscape, and peek at post-tariff deliberations before raging into a buy-sell decision. History may suggest bounces, but it doesn't guarantee them. But hey, this is just my spin. Always remember to do your own research, check financial statements, and maybe consult with financial advisors. You should use today's tech teasers to enrich your insights and craft your own strategic approach. Just like swiping through your apps to find the news bits that intrigue you most. Happy investing! Today was an exhilarating ride through the tech roller coaster. Apple managed to dodge a tariff bullet while wrestling with challenges in the AI arena and an unpredictable stock. Meanwhile, Microsoft threw down an $800 million wager on Mother Earth, highlighting its leadership role in both the tech and environmental sectors. The markets showed Apple's stock doing its best impression of a bouncing ball, laced with unpredictable turns due to economic clouds and trade winds. If you found these insights helpful or just enjoyed our tech adventure, don't forget to hit that like button, subscribe to stay in the loop, and share this video with your fellow tech enthusiasts. I'll catch you right back here tomorrow with more sizzling tech news.